By 2007, New Labour had presided over the longest period of economic growth in the post-war period. It was a Goldilocks economy with low inflation, low unemployment, and an impressive rise in spending on health and education. But the devastating global credit crunch of 2008 caused a deep recession and higher unemployment. Average GDP per capita growth in this period was an impressive 2.5%, but after the credit crunch it fell to a below average 1.3%. But how much blame does Blair and Brown deserve for the 2009 recession? And do they deserve any credit for the overall economic performance in that period? But first, what actually happened in that period of 1997 to 2010? Professor Van Reenen from the LSE claims that up to the start of the 2008 recession, the New Labour era saw productivity growth of a very impressive 2.8% a year, one of the highest rates in the post-war period, and a stark contrast to what we've seen in the past decade or so. Van Reenen claims that the high productivity growth was partly due to supply-side policies of the 1980s, but also due to some of the Labour policies on increased competition, spending on research and development, and education. Now, evaluating the economic performance of Labour, it's definitely worth bearing in mind that it was helped by the fact that in 1997 they inherited a relatively good economic situation. After the ERM debacle of 1992, the UK economy had recovered, and there was strong economic growth of around 2.5% a year, but inflation was relatively low, and national debt was close to a 90-year low. So it was a really good situation to inherit, probably very different to what a new government would inherit next year. Now, one of the rules of good economic government is not to do stupid things which upset the economy. For example, in the 1970s and 80s, the UK had a history of boom and bust economic cycles. And to avoid this, one of the first policies of the New Labour was to give the Bank of England independence in setting monetary policy. And at least until 2008, this was widely seen as successful. It helped to reduce inflation expectations, and we avoided the boom and bust cycle the UK had been so prone to. And even though the credit crunch was a difficult situation, no one considers giving back monetary policy to the government, where there's always the temptation to cut interest rates just before an election to create higher incomes. Also, the New Labour government of 1997 to 2010 avoided some of the self-inflicted wounds like austerity, Brexit or the trust budget debacle. But to avoid disastrous policies is a fairly low bar. Now, in reality, a significant portion of the UK economic growth in the 90s and 2000s was not due to government policy, but the momentum of the private sector. And in fact, a strong area of economic growth in the New Labour era was from the finance sector. Now, this growth in finance can be traced back to the Big Bang market liberalisation of the 1980s. By 2004, finance and business services accounted for 33% of the UK economy, with investment in this sector almost 4 times that of manufacturing and other industries. And in fact, the New Labour period saw a continued decline in the share of manufacturing as a share of the economy. So the UK economy was benefiting from the credit bubble of the early 2000s and the new wave of complex financial instruments like credit default swaps. Now, this would have devastating financial consequences in the 2008, but the net effect was that, at least in the early 2000s, financial services helped to kind of exaggerate the growth in the UK economy. And if we look at why the UK economy suddenly did badly after 2009, at least one reason was the hit to financial services. And in particular, it really hit UK tax revenue because up to 2008, we had relied on high income tax and corporation tax, in particular from the finance sector. Now, another impact of the growth of finance was to see a growth in incomes of the highest paid. And this explains a slight increase in wage inequality towards the end of the New Labour period. Now, overall in this period, inequality kind of remained fairly flat. There was no big increase or decrease overall. However, on the metric of inequality, New Labour did introduce some modest policies to redistribute income. In 1997, And perhaps most importantly, they introduced the national minimum wage at around £3.30 an hour. And at the time it was quite controversial. It was strongly opposed by many who claimed it would cause unemployment. But this never really materialised. Unemployment fell despite the minimum wage. And it's gone on to become one of the more successful economic policies that the UK has introduced. Also, the government did introduce tax credits for low paid and higher benefits for pensioners. The net effect was to play a role in reducing inequality and reducing poverty, especially for children and pensioners where benefits were targeted. But this reduction in inequality was somewhat fragile in that it was based on government benefits rather than underlying income, and the improvements were vulnerable to the period of austerity which followed. So overall, New Labour introduced some modest income redistribution. The IFS calculate that the net effect of government policies in this period was to give a 13% increase of the poorest 10%, whilst the richest 10% lost around 9% due to government tax and benefit changes. Now in 1976, the Labour government was forced to borrow from the IMF. It was due as much to a balance of payments crisis as high borrowing, but it cemented a reputation for Labour's fiscal incontinence, which Tony Blair was keen to change. So the first 4 years of New Labour saw very conservative spending plans. But after the 2001 election, New Labour resorted to be a more traditional tax and spend party. Both tax and spending as a share of GDP rose really quite significantly, and there's a bigger increase in spending as a share of GDP, one of the biggest parliaments on record. In 1997, health spending as a share of GDP was well below the OECD average at around 5.7% of GDP. By 2010, this had reached nearly 10% of GDP. In real terms, per capita spending almost doubled during the New Labour government. The result was more nurses and more doctors. The average wait for hospital inpatient care fell from 13 weeks to 4 weeks. And this improvement in waiting lists contrasts sharply to the experience since 2010, where waiting lists have increased, although it is worth mentioning that they use different measures of what a waiting list is. But anyway, there was a significant increase in money and spending on the NHS, which was definitely needed at the time, but the increase in spending was almost too much in the sense that it was so rapid, but it wasn't always easy to use most efficiently. And with the extra money, there came a lot of meddling on policy and a rise in bureaucracy. So it was good that spending increased, but there's always that concern about how was the money actually used. Now, on the positive side, capital spending rose from 1 billion to 5.5 billion over the decade to 2007. That money built 100 new hospitals, pushing the average age of NHS buildings down quite substantially. And it wasn't just health that saw more spending. Education saw a rise in spending as a share of GDP, with real spending almost doubling in real terms from 56 to 106 billion. This included Sure Start for under fives and an expansion of university education, with a government target of 50% of school leavers going to higher education. 10 years after 1997, graduate numbers had increased substantially from 1.8 to 2.4 million. Now, whether this expansion in student numbers is actually sustainable is a good question. Many universities are struggling financially now, and student fees have gone up really quite significantly since the expansion in university education. But it has helped to increase skills of the labour force. Also, it's worth bearing in mind that quite a lot of government spending in this period was financed through private finance initiatives. By 2008, the total value of PFI contracts was 68 billion. The idea was that the government would help to pay for public investment by raising finance from the private sector, who of course would need paying back. It committed the British taxpayer to future spending of £215 billion. But after the credit crunch, private investment dried up, so the government had to fund the private investment itself, leaving a slightly ridiculous situation where the government lent itself money to fund PFI projects. In 2018, a report by the Audit Office found the UK had incurred many billions of extra spending, but very little in the terms of benefit through PFIs. Under New Labour, net migration was averaging close to 200,000 a year, only marginally higher than the previous 10 years. Yet the decision to allow immediate migration from Eastern European countries who had just joined the EU in 2004 would have a much bigger impact than was expected at the time. Migration levels turned to be much higher than the government forecast. Interestingly, in 2004, with rising real wages and low unemployment, the decision was relatively uncontroversial. It had bipartisan support. But of course, it went on to be quite a significant factor in Brexit when real wages stopped growing after the financial crisis. Now, despite a significant rise in government spending, national debt as a share of GDP remained close to historical levels. This was due to the fact that economic growth was really quite positive and tax revenues were rising. It was only the credit crunch of 2008 that saw a change in the financial situation with record peacetime budget deficits. And one mistake was really relying on tax revenues from the finance sector, which dried up after the credit crunch. Now, given the disastrous impact of the credit crunch and the financial crisis on the UK economy, how much of this is due to the policies of Blair and Brown? Firstly, the credit crunch was a global issue, with the primary problem starting in America: reckless mortgage lending, a boom and bust in house prices, and aggressive bank lending caused the whole financial system to come under extreme pressure. And there's nothing that a UK government could have done about the problems of the US financial system. However, the UK did have its own reckless lending. Building societies which had become private banks, like Bradford and Bingley and Northern Rock, had aggressively sought to lend more mortgages in a bid to become more profitable, and they lent out more mortgages by borrowing on short-term money markets. And of course, when the credit crunch hit, the whole business model imploded, and there was a run on banks which is very rare. Now, in this backdrop of the Lehman Brothers collapse and concern over financial markets, there was a very decisive intervention by the UK government, by Gordon Brown. They recapitalised the banks, they assured savers, and they helped to restore confidence to markets. In 2007, the UK mortgage market was badly regulated. Self-certification mortgages, 100% interest-only mortgages, all contributed to a boom in house prices, which then saw a 20% fall in prices and many people left in negative equity. Now, a foresighted government would have reversed the financial liberalisation and introduced much better regulation, rather than just introducing a Whitehall-based financial services authority. But it was a topic that received little interest until the credit crisis hit in 2008. Now, the credit crunch definitely damaged the economic record of the 1997 to 2010 government. But does Gordon Brown deserve any credit for his response to the events of 2008 and 2009? There was fairly bold action. Bank recapitalisation and nationalisation helped prevent further loss of money out of the economy. It may not have saved the world, like he humorously said in that video.
The first point of recapitalisation was to save banks that would otherwise have collapsed. And we not only saved the world, saved the banks and saved the banks.
But it did help to stabilise the global economy, which was tottering on the edge, especially after the Lehman Brothers collapsed. Given the depth of the recession and fall in private spending, the government pursued a expansionary fiscal policy. VAT was temporarily cut, and this did help the economy to recover. By 2010, the UK economy was growing again. Now, politically, the high budget deficits were very costly. But in a recession, this was actually the textbook response. If private sector spending falls, the government needs to step in to maintain some kind of economic growth and prevent unemployment rising too much. Arguably, the austerity of the post-2010 election did slow down the UK's economic recovery. A continuation of Brown's economic policies may have enabled stronger growth in the 2010s. Now, another long-term issue in the UK economy is the housing market. It's been a key factor in reducing living standards, especially for young people. Under New Labour, there was a boom in house prices, with house price to incomes reaching what were then record levels pre-2008 crash. Now, during that period of New Labour, housing supply was pretty weak. It only briefly exceeded very modest government targets of 200,000 in the years just before the crash. But overall, building wasn't keeping up with a rising population. And arguably this was another missed opportunity of a period, a failure to get to grips with the long-term problems facing the UK housing market, which would magnify over the next decade. So overall, the economic record of the Labour government 1997 to 2010 was mixed. For the first 11 years, the economic growth was actually very good. Low inflation, strong growth. And the credit crunch really threw everything in the air. And in terms of blame of the credit crunch, I think that it's definitely a global issue. I mean, every country faced it. Of course, in retrospect, there was a failure of bank regulation. The biggest legacy of that government was the substantial increase in spending on health and education. And it raised levels of health and education, but also expectations. And I think there's been an expectation that we'd get ever-rising spending on health and education without necessarily putting up taxes. And so that was the start of the period of spending more, but trying to keep tax levels low. And this has obviously got worse in the past decade or so. Anyway, if you're interested in that period of New Labour, why not have a look at this video on the 1980s and Mrs Thatcher's economic record, which is very different but also very interesting.